It's Tuesday. That means it's Trading Tip Tuesday. Wanted to take a look at candlesticks today. Tons of caveats with this, especially crypto. You're going to see a lot of these cheat sheets. This is one of my personal favorites. It's simple. Essentially, you want to know, does a candlestick tell you bullish or bearish bias? You want to know the simple 1, 2, and 3 candlestick patterns that you're looking for. Once you see them a few times, it's pretty easy to spot them over and over and over again and get a sense of whether or not something is leaning bullish, leaning bearish, leaning towards a reversal, leaning towards a continuation. Some of these you see almost never. Some of them you see pretty frequently. Because crypto is 24/7, you're not going to see patterns like an abandoned baby, bullish or bearish, because we don't have closes in the market. So this will just look like one giant candle in the middle, and hopefully that's obvious what I mean by that. There's no closes, it's 24/7, so you're not going to get any gaps in any crypto chart. It's going to make things like bullish or bearish engulfing a little bit harder to see, again, because there's no gaps, there's no opens and closes, bullish kicker. Some of these you're just not going to see in crypto, which kind of simplifies it for the better, really. It's less stuff to pay attention to. And if you're not familiar with a candlestick, you have the high and the low. The wicks are the lines here, and then the body is the open and the close. I'm going to be talking a lot about the wicks because, again, there's no open or close for crypto stuff, so you get a lot of wick type activity that you're watching for. Really, some of my favorites that I watch the most are the single candle patterns, and you can essentially just invert them to get the bullish or bearish versions of themselves. Another caveat about candlesticks is it depends on the next candle more than anything. So you might see this as a dragonfly, but until you see the next candle and the next candle closes above that candle, then it confirms bullish. Same thing with shooting star. You may see a shooting star and then the next candle might close higher than the wick. That's extremely bullish. If that's not the case, closes below the body of the previous candle, then you can say, okay, this is bearish reversal, certainly. And like I said, there's lots of these various cheat sheets online. They're all valid. You can look at them all. They all pretty much say the same thing. You just have to sort of nullify the opens and closes that some of these show up on, where you're not going to see that in crypto. One that I don't see too often, but fairly frequently from memory, is this rising 3 and falling 3 candlestick pattern. When you see it, it's obvious because you get 3 candlesticks within the body of the previous candlestick. And again, it doesn't confirm until you're above the previous candlestick, the previous 4 candlesticks, and the same thing with the bearish version. But when you see it, I don't have any highlighted on the video today, but when you see it, you'll know what I mean. Another one's the tri-star, which is almost like a diamond top or bottom. You don't see it too often in crypto, again, because we don't have opens or closes, but you will see a bunch of wicks like this that do typically indicate trend reversal. And something else to talk about is I use everything on log. Some of these are easier to see on linear. I just don't ever use linear for anything. And the first one that probably most people learn is the tweezer top, tweezer bottom. You can see both times in our current previous local highs, late 2017, mid 2019. We had a tweezer top, which is what it's called, both times where the second wick did not exceed the previous wick. And anytime you see that on a higher time frame, it's typically almost always a reversal sign. So here's the monthly right now. It's not looking so hot, right? Basically, we have the rest of the month, which is a few days, and then all of next month to kind of make a decision. We have to exceed the all-time high next month in order for the candlesticks to reveal to you a bearish bias. On the other hand, if we break 42 on a close, next month's close, then you can say, wow, this is incredibly bullish, right? But it's all dependent on next month's close, even though this clearly doesn't look so hot. And some of these, are just not as easy to see necessarily on log, but once you know what you're looking for, they're there, right? I'm going to be watching this wick next month when the candle closes in February, thinking, okay, are we higher or lower than 42K? Because this is setting up to be quite a bearish event. Something else you see all the time is a dragonfly. I love the Dragonfly Doji right here. I think of this one not as like a gravestone doji, but just as an inverted dragonfly. So you see these a lot when the market sells off 10, 20, 30%. These are weekly candlesticks, and this was quite the market event at the time. And you can see we had a tweezer bottom here, and then we broke that, right? So, okay, that's nullified. Now what? We have this dragonfly candlestick. If we were to break below that, then the reversal is obviously much less of a chance, has much less of a chance of happening. Here, this one I just remember as an inverted hammer at the time, massive wick, sort of near the bottom of the trend. I mean, this just looks like I'm picking up highs and lows, picking out highs and lows and saying that they mean something, but the reality is, yeah, they do mean something. The wicks are super important in crypto because you don't have opens or closes. Here's a violated, invalidated tweezer bottom here on this week, canceled out that tweezer bottom. Okay, then it's not a reversal, right? So again, you're just looking for biases. These aren't necessarily, if I see this, then I do this immediately sort of situations. Even here, you see this, okay, and it's green. What, do you wait the next entire week to open a position? Do you wait until price is above the wick? You know, this crypto is a volatile beast. So waiting until after this candle closes is probably too late to take advantage of that. Waiting till the weekly closes is definitely prudent, because then it's pretty obvious that okay, there's at least a chance that this is going to be something, right? And it was quite the reversal at the time. It ended up selling off after that, but this just tells you bias in the moment. You know, you shouldn't expect a massive rally just off any single inverted hammer. You should expect bullish reversal, bullish continuation, whatever it is. Arguably inverted hammer here. Didn't really go anywhere. Here's the doji party thing I'm talking about. I didn't call it a doji party, but somebody on Twitter, Hearns, calls it that. In this case, you know, you'd expect a reversal here even, and it didn't happen. I think, no, actually, okay, so if it was green, red, green, I think that's reversal, right? And if it's red, green, red, I guess it is continuation. Anyway, at the very least, even recognizing that that's something, then you can go back to your cheat sheet and say, okay, you know, this might not happen once every 3 years, but when it does, I start to pay attention to it. Another example I love to point to is the oil chart on the weekly. You just get a series of dojis here, and this ended up being a diamond top type chart pattern. But anytime you see a move up with a bunch of dojis that are tight, it's typically almost always a reversal. You're usually never gonna see this result in continuation. Here's one on ETH on the weekly in 2020, right? So March happens, everything sells off across the planet, right? Doesn't matter what you are. And ETH goes into bottomy candlestick mode. Another way you can think about this is, where's bearish exhaustion? How do I see that? Where is bullish exhaustion? How do I see that? How do I know the bottom's in, right? How do I know the top is in? First we have a tweezer bottom, then we have a spinning top, then we have a type of inverted hammer. So collectively, to me, I'm thinking, okay, this looks pretty good, right, for a reversal. And I know it looks like I'm just pointing out extreme tops and bottoms and calling them something. This is how you play the game when it's happening. Just the other week, I was worried about this candlestick, particularly right here, which looked like a hammer, you know, the opposite of an inverted hammer. And until we closed the next week green, then I could breathe a sigh of relief. Okay, this is probably going higher. Same thing with this candlestick, spinning top. Okay, we close higher. Sigh of relief, right? So that's how you got to play that game. Even this candlestick here, look at this wick, and we closed higher the next week. Now we're printing a spinning top, which kind of says the market's coming to an equilibrium, basically when the wicks are the same length on each side of the candle body. Also a risk of reversal type situation here. So I'm less concerned about what happens this week and more concerned about how the next week closes. Because if the next week closes lower, that confirms the reversal bias in the market for me. And I don't use candlesticks a lot anymore. I tend to lean on chart patterns a lot more heavily. But when you see wicks like this is a weekly ETH BTC chart. When you're seeing tweezer bottoms arguably like this, when you're seeing inverted dragonflies like this, I'm probably the only person in the world who calls it that, but that's just how I think of it. This is not a tweezer bottom, by the way, because the second candle breaks the wick of the first one. Not that that had any bearing on this situation, but I see a lot of people pointing these out and thinking this is a tweezer bottom. That's not a tweezer bottom. This is a tweezer bottom, right? The second wick did not exceed the first. A few more. You'll see a bunch of wicks a bunch of stuff like this, right? You'll think, okay, is this a candlestick pattern? Not really. You know, this, again, it's not, none of these are tweezer bottoms. It's more of a chart pattern, W double bottom. Again, you're seeing reversal type stuff here with wick, tweezer top, spinning top, another spinning top, didn't really exceed the previous wick, and, you know, down she goes. These aren't going to guarantee multi-week, multi-month, multi-day reversals or anything like that, but it reveals the bias in the moment. And then if you want to get really picky about it, you know, if you're watching this tick by tick, in this case day by day, you're always looking for these wicks, you're always looking for these heavy-bodied candlesticks. For any type of reversal, here is more of a dragonfly than a spinning top into some sort of doji situation that reverses. I mean, none of this is perfect, but you're just looking for a bias. You're looking for a leg up. Here's tweezer top, tweezer bottom. A great dragonfly candlestick. Anytime you see just a mega down move with a candle like this is Ave BTC, by the way. I get really excited because typically that indicates bearish exhaustion, especially if this is a green candlestick, meaning it closed higher than it opened. Here's arguably an inverted hammer that breaks up and then eventually goes lower. So there's lots and lots of this in crypto. Here's XRP on the 12-hour. So inverted dragonfly. This was a 3 soldiers, basically where the bodies are the complete duration of the candlestick. If you see that, it's super bullish. If you see the opposite, kind of like you did here, super bearish. And then lastly, I'll just talk about Uni BTC. On a lot of these DeFi charts right now, you'll see charts like this where this is the daily. Everything looks green. You know, there's no real candlestick patterns here that I'd be worried about. I mean, if anything, you'd be worried about yesterday because it was a bit of a spinning top situation. But overall, you know, you can use candlesticks not to just look for trades, but when to look to not be in a trade as well. When to not close your position, just leave your position be. Let's say everybody's bullish on Uni, you're kind of worried, you're up several multiples or whatever it may be. And, you know, the candlesticks here look great. The chart looks super healthy. So you can also use candlesticks as a way to just kind of reset your own bias. You know, is there anything going on here that looks weird, right? Is there some spinning top dragonfly thing, inverted hammer thing, right? There's none of this right now, right? This is just fully bodied candles over and over and over again. No wicks, no euphoria, no fear, which is another way to think of these wicks. These are typically euphoria, which is the last stage of the move. You're not seeing any of that here on a lot of this DeFi stuff. So hopefully that was helpful. Take a look at the cheat sheets. Most of them say the same thing. Most of them have the same patterns. It's worth knowing maybe the 5 or 6 that you see frequently, as they tend to help determine a bias in the market.